There's lots of different types of investing strategies out there. Not everybody is going to follow the same one. It's very dependent on your risk tolerance, your time horizon, and several other factors. I started this channel to help out other beginner investors because guess what? 20 months ago, that was me. And in that time, I built a portfolio that's worth $330,000. In this video series, I'm building a covered call strategy from scratch. So if you go back and you watch the very first episode, you'll see where I start to do this from the very beginning if this is the type of strategy that you are interested in. This is episode number 3 in this series where we're going to talk a little bit about the strategy and what exactly a covered call is. Let's jump over to the portfolio, see how it's performing. We'll see how much we've purchased since the last video I posted, its performance, and how much money we've deposited in the account. We're using Wealthsimple. This is the broker that I've been using since I started my investing journey, and I believe it's a great platform for beginners. I did do a video on it, so if you want to learn more about it, you should jump over and check that video out. We're also going to be using Passiv. Passiv is the tool that I use to bring all of my portfolios in one place and examine the performance to see how things are doing so that I don't have to be using multiple different websites to do so. All right, so the portfolio is sitting at $1,325.06. Over the last day, it's down $5.82. Over the last week, it's down $24.94. Over the last month, it's down $26.96. And over the last 3 months, it's up $2.48. We can't look at the yearly performance because we haven't held this portfolio for long enough yet. And most certainly, the all-time returns are sitting at $2.80, which is consistent with that 3-month mark that we're looking at. So currently there's $8.18 sitting in this portfolio to trade with. The way that I set this up is I wanted to show every beginner that it's very simple to start investing. You don't have to use very much money depending on how much money you're making. Even how old you are might determine how much money you want to be putting in. Now, I started investing when I was 50, so I have a lot of ground to make up. But if you're young, in your late teens or early 20s, or even in your 30s, you guys have so much more time. You could conceivably be putting in small amounts and growing that over time. So the way I set this up is we're depositing $6 into this account every single day. And every time I find a little bit of extra money, I throw it in there, which happens to be the referrals that I make. Now, my channel is growing quite quickly. We're over 1,500 subscribers at this point, and I really appreciate everybody's patronage because it is the reason that I started my channel, as I wanted to share my journey so you could learn from all of the mistakes, but all the things that I learn over time. So thanks very much for all of you that have taken the time to hit that subscribe button. I really appreciate it. Now, if you want to help out my channel with the algorithm, hit that like, and obviously share it with some of your friends because it really does help out the channel if you know someone that needs a little bit of a boost to get you started. Now, I'm not providing advice, I'm just simply sharing my journey so that you can learn from that. All right, so we have $24 that's not available. So with this account, it takes a few days for the money to deposit in. So every day I deposit that money, and in a couple of days it becomes available, and when it does, that's when I then turn around and purchase various stocks. Now we have 2 holdings in this, which I did in the very first 2 videos. We have EQCL and HYLD. So we currently hold 28 shares of EQCL at a total value of $644, and we have HYLD at 47 shares, which is a total of $648. And of course, we can see the performance of each right underneath them. So EQCL, which is performing not bad, it's up 0.92%. That's a pretty small amount. But remember, when you're investing with covered calls, we're not investing for large increase. We're looking for income coming into our account. And of course, with HYLD, we can see that it's down $17. But I can assure you that this is reflective of the markets because the rest of my portfolio, which is not in covered calls, is performing very similarly. Over the last month in February, things have been trending sort of sideways, I'll call it. There's been some ups and downs. But I would call it a sideways trending market. All right, so we're in Passiv. That's the tool that I said that I use to track the performance of all the portfolios. And you can search based on each one of your individual holdings or portfolios. In this case, we're just looking at my Wealthsimple Spousal RRSP. A spousal RRSP, if you don't know, is where I make the contribution and my wife then takes the money out later, so I actually get the tax credit right now. Now, if you look up here, I've done a custom search from January the 13th until today, which is February 24th when I'm shooting this video. The reason for that is I wanted to show you the performance in that last month since the last video that I posted. Now, you can look at the 1 year, year to date, or the all-time returns, but for now, we're just going to look at the monthly performance, and then I'll just show you the all-time returns on the entire account since then. So net contributions into the account in that period of time was $373. We're averaging about $186 a month. Now, there was some extra money I plopped in here, and I'll show you what that looks like in the activity tracker. Now, this graph here, the total value shows you the blue line is our contributions and the green line is the performance of the account as it grows. Now, we can see those lines are really close together. They did kind of cross each other, meaning the portfolio started to grow a bit, but lately the market has been taking a bit of a beating. My entire portfolio has kind of been up and down all month. And you'll see in my month-end video, which is coming up, what that looks like. But this month was definitely not like the rest of 2024, where things were growing quite quickly. So the net change in the account was $396. The rate of return in that time is 3.01% with an investment growth of $17. Here is our dividends. So of course, this is the part that most people are interested in when they're looking at a covered call strategy. And we can see here by this graph, there are the two holdings we have, HYLD and EQCL. And in that particular period of time, it produced $10 worth of dividends. The average so far since we opened it, now keep in mind it's averaging out because 1 month was smaller than the other, is $7. Now, we're not paying any commissions or fees because guess what? Wealthsimple doesn't charge any. But recently, Questrade did make some big changes, which is going to give Wealthsimple a run for its money. So you might want to check this video right here because it'll fill you in on that stuff. So here we go at the bottom. We can see that the total dividends in that time were $5 for HYLD. Now, it is an approximation. It doesn't break it down into cents. And EQCL paid out $5 as well. And total dividend income thus far in that period of time was $10. Now we'll jump over and we'll look at the all-time returns of this account. So we've been contributing in this account since October of 2024, and the total net contributions are $1,328. We've been contributing every month. Again, we can see the blue line is sort of outpacing it. So the money we're putting in is more than the growth in the account. Now remember, we're looking for monthly generated income. That's what covered calls do for you. Rate of return in that time, 1.18%. Investment growth is negative 27%. Now remember, we're looking at all-time returns here, and we really aren't been doing it long enough to really see any major changes. We're going to have to keep watching and keep contributing. But like I said, I want to show you guys it's very simple. You don't have to put a lot of money aside in order to start generating some monthly income. All right, so the average income right now is $5 on the month, but you can see through this graph here, the first month we made $3, then $7, and in the last month it's averaging at $10, which will continue to grow. So that's the money that's coming back to you every single month. No fees or commissions, and average dividend at, when you look at that over the totality of it, is $20. Okay, so here we are in the activity tracker part of Passiv. Now this is actually a great tool because you can break down everything you've done in every single account day by day. Now, if you're just starting out your investing journey and you're looking for a tool to use, this is one that I would recommend. There are plenty of other ones out there that all tend to have fees or some version of a free spin on it. However, if you use the free version, some of the functionalities are not included. Now, in this case with Passiv, the free one is good. It'll do most of the things you want. However, if you're a Questrade user, it actually comes for free. So this makes the elite version available to you. But if you're interested in the elite version of Passiv, look in the video description below. You'll find my link. And if you use that link, you'll get a discount on the elite version of Passiv. You'll be supporting the channel in the same breath, which I really appreciate. Now, if you are looking to get started with any other parts of your investing journey, whether it be Wealthsimple or Questrade or even EQ Bank, if you've watched some of my other videos, those links are also in the video description below. So check them out. Another great way to support the channel. Okay, so we can see day by day what's been going on in the account. As you know, I've been contributing $6. Now, as we go through here, you're going to see some contributions that were actually more than $6. So when people support my channel by using some referral links, that money comes through as a bonus to me, but it also can be taxable depending on where it came from. So for instance, with my Wealthsimple Cash account, all the interest that I earn in there and in my EQ bank account is taxable. So what I do with that money is I put it into the Spousal RRSP. Now initially during this month, I had decided that I was going to put the cash account interest into this account. Initially, but when I got to the end of the month, I decided to change my mind because I have two spousal accounts. So what I'm going to do is if you guys use the referral link, I'll actually put that money in this account, and the cash account money will then go into the other spousal account. So we can see here we had our regular contributions, and then of course as the money pops in, for instance on January the 15th, we bought 1 share of each, and I use Passiv to help me figure that out. Passiv has a tool that will look at the money that's in your account and tell you based on your asset allocation how much of each holding you should purchase. So here you can see $25 on January 16th. That was a referral that somebody had used my referral link with Wealthsimple, which I truly appreciate. It makes all the hard work that I've done making these videos worth it when people use those links. All right, and of course, once the money settled, we made some more purchases of HYLD and EQCL as we go through the month. And once we get down to the bottom, the most important part that people are really interested in, so here is the dividends that we earned in February. Now remember, both of these funds pay out monthly. So on February the 7th, EQCL paid out $5.13 and HYLD paid out $5.34. Now, of course, this will grow. The more we add, the more we get. All right, so you've decided that monthly income is a type of strategy that you want to follow, or commonly referred to as income-oriented investing. This would encompass covered call ETFs or perhaps some high yield funds. But we need to understand a little bit about what exactly a covered call is. All right, so I want you to imagine that you own a farm. And on your farm, you have chickens, and those chickens lay eggs every day, and then you would sell those eggs at the market price every single day. Now, your neighbor comes along and he says, listen, Darren, I want to buy some eggs from you tomorrow, say a dozen. But I want to buy them at today's price and guarantee that price for today. And so to do that, I'm going to offer you a small amount of money to lock the price in today. So you agree to take your neighbor's small payment. If your neighbor decides that they want to buy the eggs tomorrow, then they get to buy them at the price that they had established with you. But if they change your mind, you get to actually keep the premium. What is your neighbor hoping? That by tomorrow, the stock price is going to go up, and therefore you will have to sell those eggs at a lesser price. Therefore, it's not in your favor. However, if the price doesn't go up, you get to keep the premium that the neighbor offered you. Now let's talk a little bit about who these types of funds or this type of investing is ideal for. So income-focused investors are people that are likely retirees or someone that's seeking passive income. Now that doesn't mean that you have to be retired. It could be someone that finds themselves in a situation where perhaps they want to take all their investments, invest in covered calls in order to generate monthly income to live off of. It's definitely not always about retiring. But it is ideal for retirees who want to maintain their portfolio depending on what type of covered calls they're investing in. By taking the balance that they've earned over their lifetime that's built up and investing it in covered calls, they'll be generating monthly income and ideally maintaining the balance. It's also ideal for people that are risk averse when it comes to their investing or seeking low volatility. Why? Because the covered call strategy provides some downside protection, though not full. Ideal for investors who want equity exposure and they don't really want to own the stocks outright. It's also ideal for investors in flat or slow growth markets. Why? Because these ETFs perform best when stock prices are stable or slowly rising. It's ideal for those who believe the market will be range bound and want to profit from sideways movements. Example, someone who expects markets to be choppy but still wants income. This type type of investing is also good for people who like dividends or value investing seeking enhanced yield. Why? Well, because many covered call ETFs focus on high dividend sectors, enhancing total yields. It's ideal for investors who already like dividend stocks and want extra income through option premiums. Now, who is this type of investing not for? It's definitely not for growth-oriented investors because these ETFs cap upside potential, so they will likely underperform in strong bull markets like we've seen in the past in 2024. Investors who need full downside protection, while covered calls provide income, they do not fully protect against market downturns as well. So in short, a covered call strategy is great for passive income or income-oriented investors for a specific purpose. If you're looking for growth-oriented type of investing with a long time horizon, these types of funds are not going to be ideal for that. Now, if you're just starting out your investing journey and you're not too sure where to start with covered calls, you can look at how I started out my covered call investing journey in this series by watching this video right here.